Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip shows the bottoming pattern for the yield of the 30-year U.S. Treasury bond. The daily chart shows that a close above the 50-day simple moving average at 4.426 indicates risk to the 200-day simple moving average at 4.706. Rising bond yields are a double whammy. They make stocks less attractive in terms of valuations, and they force mortgage rates higher. The conforming 30-year fixed-rate mortgage is 5.68%, with the jumbo rate 153 basis points higher at 7.21%. The higher ceiling on conforming mortgages adversely affects both mortgage-backed securities structures. Wall Street has cut fixed income trading staff and, given reduced capital, cannot provide the secondary market liquidity that they have in the past. Investors in mortgage-backed securities are seeking wider spreads after getting burned by subprime structures. My second blip tracks the volatility for gold and crude oil after their bubbles popped last week. COMEX gold reached its all-time high of 1,033.9 on March 17th, but could not stay above my monthly pivot at 990.4. A close below the 50-day simple moving average at 937.6 indicates risk to quarterly support at 856.5. NYMEX crude oil reached an all-time high of 111.8 also on March 17th, and it's between my semi-annual pivot at 99.83 and my monthly pivot at 109.09. To signal another leg down for oil, there needs to be a close below its 50-day simple moving average at 98.19. My third blip shows the weak dollar versus Japanese yen and the strong euro. The dollar versus Japanese yen traded down to 96.15 on March 17th, a low not seen since 1995, and has since traded around my monthly pivot at 99.39. The dollar is well below its 50-day simple moving average, declining at 104.51. The euro traded at a new all-time high at 1.5901, also on March 17, and returned to my monthly pivot at 1.5462. The euro is well above its 50-day simple moving average at 1.5051 and rising. We are either looking at a double top or a breakout. So this is the chart of the day. My fourth blip looks at the Dow Industrials and Dow Transports to keep a pulse on Dow theory. Under the Dow theory, Monday's close for the transports was above the February closing high of 4824.68, which shifted Dow theory to neutral from negative. If the transports close below its 200-day simple moving average at 47.90, then watch for weakness relative to the January closing low at 4,140.29. A close below that level would return Dow theory to negative. If the industrials close above its February closing high at 12,743.19, Dow theory shifts to bullish. A close below the 50-day simple moving average at 12,316 would set my annual pivot at 12,670 as the second quarter ceiling. Send your comments and questions to support at RightSideAdvisors.com. That's today's 4 in 4. Enjoy your weekend.